market. And Chris, I just want to ask you, before we get these numbers, what's going on in the UK economy that investors need to be most focused on, do you think?
Well, it's a difficult game in the UK at the moment, not least for policymakers, because there's an element of stasis. Just everyone is waiting for Brexit to develop in the election.
Chris, I'm just going to have to interrupt you. UK November flash services PMI of 48.6 versus an October final number of 50. This is the lowest since July 2016. So not great news at all for the services sector, which is so dominant in the UK. The UK November flash manufacturing PMI 48.3 versus an October final print of 49.6. The flash composite PMI 48.5 versus an October final print of 50, the lowest since July 2016. And
it's consistent, it's saying, with the GDP reading of negative 0.2% quarter on quarter. That's according to you guys at IHS. Sterling, you can see, falling to a one-week low against the US dollar. That seems to be thanks to the fact that these are worse than expected. That consistency with the GDP reading of negative 0.2% quarter on quarter, how concerning should that be for people?
This is really quite a concern. Now, this isn't just the lowest number since July 2016. It's the second lowest since early 2009. So that 2016 number was immediately after the referendum, when business had a heart attack, basically a brief one, because you had stimulus enacted straight away and fiscal reboot and so forth talked about. And this is nearly as bad as that moment now. So business very worried about the Brexit outcome, very worried about uncertainty in the election. So everything is just kind of on hold at the moment. Just we were talking about before, what do investors do? Just everything is on hold.
Just pure economic stasis.
And we're seeing this with hiring as well. Hiring's dried up. You've had 3 months now of net job losses in the PMIs. Now remember, the labour market's been the UK's resilience, right? And that's what's been driving growth, and that's what's been encouraging policymakers in particular to keep rates on hold. But it seems like even that support is now fading.
And when things are in circumstances like this, when you look at an economy in the UK that is seeing this kinds of negative data, how quickly can it be turned around if some of that uncertainty you mentioned around the election is resolved, if the uncertainty around Brexit is resolved? Is this something you can just flick a switch and go back to where you should have been?
It can. You see very quick reaction in the PMIs to policy changes and political changes in particular. They can switch very sharply month to month. If the news flow improves, if business suddenly sees there's a better environment, then we will see these numbers pick up quite rapidly, I'm sure of it. But it's a case of, is the environment right? It's certainly not right now. And even if you get a Brexit deal come through quickly, there's still a huge amount of uncertainty for business in relation to the future trading relationship with Europe in particular. So
I just want to stick with the volatility for a little bit, because what we saw in the month of March, what we saw in the month of October was huge stockpiling, and that artificially boosted the PMIs, artificially or not. It happened, but it'll come back. In October, though, it was a little bit less than what we saw in the month of March. What do you expect for the month of January? How much of a boost are we going to see, or have businesses now really gotten used to that idea of, oh, wow, there comes another deadline, we're going to have to stockpile again?
Yeah, there's some evidence that the October stockpile wasn't a big purely because there wasn't enough warehouse space. But I think there is an element of businesses there's fatigue setting in here, and of course it's expensive. It's hugely expensive to build up these stock levels in preparation of the worst happening. And so I think there'll be a case of businesses just thinking let's just try and risk this one. Let's see how we all get by. So I think you won't see a big boost come the new year.
Yeah. Thank you so much for that. Really appreciate your insight. Chris Williamson, Chief Business Economist at IHS Markit. Now, the UK Conservative Party says it will raise taxes on property purchases to 3% as part of its bid. Re-election. The so-called stamp duty land tax would apply to companies and individuals not resident in Britain for tax purposes. The party says the measure could raise up to £120 million per year.
Meanwhile, Britain's Labour Party has unveiled its manifesto ahead of next month's general election. Leader Jeremy Corbyn promised to take on, quote, bankers, billionaires and the establishment as he announced what he calls his manifesto of hope. Plans include raising corporate tax and nationalising areas like rail, water and mail. Labour's spending plans are set to cost almost £83 billion, Carolyn.
Okay, let's have a quick look at how equity markets are performing. We're seeing a bounce back from yesterday's trading session. We saw 2 or 3 days of losses for these European markets. The Xetra DAX up by 0.1%, the FTSE 100 up by 0.9%. FX, so that's where we saw big moves this morning. Sterling lower after that miss on the PMI numbers. And of course, the euro saw, there you go, we've got sterling here, 128.73 off by 0.3%. And euro dollar now flat on the day after that miss on the Eurozone PMIs. Willem.
Thank you so much. Well, Christine Lagarde made her first high-profile speech as ECB president at the European Banking Congress today. She highlighted some of the challenges the Eurozone faces, including a slowdown in trade. She also echoed the sentiments of some of the other speakers on the need to work towards a strong European market union.
This involves, in my view, moving towards a new European policy mix, which has obviously a number of key elements. Now, the first, and it's not because it's the only game in town, it shouldn't be, the first is monetary policy. And I'm saying that because it's my area of responsibility, which will undergo a strategic review due to begin in the near future. More later on that. But give us time to actually do the work in a cohesive way.
Well, sticking with Europe, my colleague Annette Weisbach also spoke to the Commerzbank CEO Martin Zilke ahead of a speech at the European Banking Congress. She joins us now live from Frankfurt. Annette, what did Zilke have to say?
He actually was saying in part of that interview that he was looking for a more integrated Europe, because clearly if we had more of a common banking market, then also it would mean that banks could actually make more money with services to delivered across the European Union. Of course, that's all about integration, banking union, and also he was supporting that recent proposal by the German finance Minister Olaf Scholz, who was calling for a common deposit scheme, which is kind of a new thing for a German finance minister. Germany was always opposing that idea to have a common liability in that form of a common deposit scheme. Well, having said that, I caught up with Martin Zilke, the CEO of Commerzbank, also to talk about the banking union and what he thinks about that going forward. Take a listen here.
I think banking union and moreover capital union will create a huge market and a huge level playing field that gives banks much better business opportunities than in a fragmented market as we see it now in Europe, especially if you compare it to, let's say, the US banks. So if we really want to compete with our American friends, I think we really need finished banking union and a capital markets union.
Is it also because it's easier to do cross-border mergers and to have bigger banks? Because clearly, if you look back 10 years ago, after the financial crisis, the discrepancy wasn't that big. So European banks were not that much smaller than Wall Street Bank, but now it's like a kind of completely different story.
Well, I think the reasons are a little bit more complex than only this part, but it's absolutely clear. A banking union would give banks in Europe the opportunity to create really European business models and franchises. As long as we don't have this, I don't expect that to be, and that's not good.
If you look at the different European markets, which markets do you think are most attractive if you think of doing business elsewhere?
Well, it depends how you look into it. Yeah, for example, of course, Germany is, because it is a so strong economy, is an absolutely attractive market from the, let's say, business relevance. If you look on it from a margin perspective, I would see other markets which have much more juice in it, if you want to see it. But I think, of course, the huge markets like Germany, France, Italy, Spain, and of course the Benelux and all the others. Europe as a whole is an important market. And I think if you ask me, it's not a question of single nations or single markets. It is the question of the single market. It is the question of, can we really use this huge market with its huge people as a market for banks, but not only for banks, but for the real economy as well.
So that theme was more or less also repeated by the new ECB president, Christine Lagarde. She was also saying that we need to have a more complete Europe. We need to have more of an understanding to be one big market in order to be really successful between the US and China. So I guess Lagarde's speech was an interesting one because it was much more political than Mario Draghi would have ever been and much less monetary policy focused. But she was, what was interesting here for that German audience, actually reflecting on the side effects of its current monetary policy stance quite explicitly. And of course, she was also telling us that very soon we'll get a strategic review of the monetary policy framework of the ECB. So it will never be a dull moment covering the ECB, I guess. For that, back to you, Carolyn.
And maybe more Beatles quotes and a little bit more of a shake-up. And she also promised that even next year her German is going to be even better. We'll see about that. Annette, thank you so much for that. Now, switching gears, in the final Trump impeachment hearing of the week, former Russia advisor Fiona Hill debunked a conspiracy theory that Ukraine interfered in the 2016 election, which is a key line of the president's defense. Hill urged lawmakers to avoid, quote, politically driven falsehoods. David Holmes, a State Department advisor in Kiev, also testified before the House. He shed further light on a phone call between Trump and U.S. Ambassador to the EU, Gordon Sondland.
And sticking with U.S. politics, former New York Mayor Michael Bloomberg has filed official federal paperwork to run for president in the 2020 Democratic primary race. The billionaire previously filed similar paperwork at a state level in Alabama, Arkansas, and Texas, but Bloomberg has still not formally announced his intention to run.
Disney heiress Abigail Disney has repeated her demand for a new tax on Americans' wealthiest citizens. At the Women's Forum in Paris, the activist and filmmaker told CNBC in an exclusive interview that many of the key arguments against a new wealth tax were simply not grounded in reality.
If you were talking, for instance, about Elizabeth Warren's 2%, if you have $1 billion and you don't make $100 million every year just by sitting on your couch at home, truthfully, you're kind of an idiot, right? Money just makes money. It's one of the hardest things in the world not to let it grow. And so it's really important to say, if it's a 2%, 3% tax, it will in no way inhibit, first of all, your buying power, and second of all, the growth of your buying power. And so I don't understand what the hesitation is around a wealth tax, because it in no way encumbers a person who is already so far past being able to spend that money that it could be so much better used.
Disney also said it can be difficult for female entrepreneurs to raise capital at the moment.
Access to financing and, the finance business has a kind of priest class because it's gotten increasingly obscure. And so the more obscure it gets and the more a priest class forms around very specialized information, the more male it tends to get. And so the decisions that get made aren't made with everyone in mind, which is not to say men can't make decisions that are perfectly wonderful, but they don't always see all of it. And that's why women are so important, and other marginal groups are important to have.
That was the granddaughter of Walt Disney, Abigail Disney, talking to our colleague Karen Cho. Karen also talked to MasterCard's executive vice chairman, Ann Cairns. She asked her about the recent high-profile criticism of the Goldman Sachs Apple credit card. That, of course, that criticism has been focused on apparent gender bias in the extension of credit.
Now that the algorithms are written to be very logical and assess risk based on historical data built in an environment that was built for men, then we're actually seeing it get worse sometimes with algorithms. I think there will be tweaking to algorithms because it's well discussed in the industry that algorithms can be biased. And I actually think that regulators will look at this and businesses will look at it themselves and say, listen, women make up half the population in the world and they are becoming increasingly wealthy. and banks will want to serve them longer term. So I think there will be a business driver and a regulatory driver, and there is awareness in the industry about existing biases.
Well, coming up on the show, will the current IPO slump continue? We'll have a UBS MD joining us with his outlook for the year ahead in just a few moments' time.
Do you have concerns about mild memory loss related to aging?
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista, who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the mega plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes NI.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Going, gone.
Some things just don't hang around. Like a great deal in Tesco Mobile's best ever Black Friday event. Right now you can get the Samsung Galaxy S10 for just $29.99 a month. But this deal ends Sunday 1st of December. Catch it before it's gone. Tesco Mobile's best ever Black Friday event. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £35.99, now £29.99. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Bootlegs out to the left, looking to the left, firing, caught, 10, 5, touchdown!
NFL fans, the action continues this weekend on TuneIn Premium. This Sunday, TuneIn has every NFL football game, starting with the Miami Dolphins at the Cleveland Browns at 1 o'clock p.m. Eastern, and closing out Sunday night with the Packers at the 49ers at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to the program. Reuters has reported that Unilever, Henkel and a number of buyout funds are in talks with Coty to acquire a portion of the US cosmetic maker's portfolio. The news agency reports Coty will launch an auction process next month to find a suitor for its hair and nail care range. The portfolio includes brands like Wella and Clairol and is estimated to be worth up to $7 billion. Coty shares, they initially jumped on the news, but they actually ended the session almost a percentage point lower. And CNBC learned yesterday that Charles Schwab is in talks to buy rival broker TD Ameritrade. The purchase is expected to be worth around $26 billion. That represents an 18% premium on Ameritrade's market price before the deal was first reported publicly. Larger brokers, including Schwab, have of course faced pressure from disruptive online brokerage operators to cut their commissions, and many of them have now reduced them to near 0%. Shares in the two brokers closed Thursday's session sharply higher on the back of that news.
And UBS says it expects equity issuance in Europe to remain depressed as investors continue to remain particularly selective in the latter part of the cycle. Meanwhile, tech is expected to remain the big ticket of the U.S. IPO market. Let's talk more about this outlook for 2020 with Gareth McCartney, Managing Director, Head of ECM, Cash and Global Head of Equity Syndicate at UBS. Great to have you on the show. So there's this clear dichotomy of ECM issuance on the one hand. On the other hand, we've got the record highs in the equity markets. How do you explain that?
I think it's a late cycle phenomena where investors are being very selective of what they're looking for. So IPOs which offer yield or growth are well received. Otherwise, it's difficult for investors to find the cash to put to work in a new story.
So you say it's selectiveness on part of the investor base, but also maybe the competition that we're seeing in terms of the cost of capital of debt financing. To what extent does that play a role?
I think there's an element of that, but I think what's really going on in the equity market is that low cost of debt you're talking about is driving asset allocation into equities. That's driving the index performance, but underneath it, equity fund managers are really struggling to perform and outperform the index.
You said before, or I mentioned before, that global tech up 30% year to date. You say this could be one of the better performing sectors next year. We have seen some IPOs in the US that haven't performed as well. They've really been lagging, Uber, for example. How do you explain that there's still a lot of interest in tech?
I think there's a scarcity of growth given the underlying macro backdrop. So I think the one sector that's really either through disruption or genuinely new innovation that's delivering growth is technology. And you're right, some of the high profile deals have perhaps been a little underwhelming, but actually in the main, that's the sector that's delivering growth. Therefore, it's attracting capital in the public markets from equity investors.
And if you look at the big picture for issuance, you're seeing a lot of large, high-value deals going through, but not such consistent volume. What does that mean for banks looking to earn fees?
Look, it's tough. I mean, the fee pool in Europe for ECM this year is pretty much at decade lows. That binary outcome I mentioned earlier is translating to large liquid deals getting done, the rest not. And I think really as we transform into 2020, we hope some of the political instability will normalize, and that should drive a pickup, particularly here in the UK, in regular way volume.
Carolyn mentioned some of the challenges that IPOs over the past year or so have meant for investors, the impact they've had on investor thinking, confidence.
Yeah.
What about the way that exchange operators are doing business? What about the rise of passive investing amongst retail investors? What's that doing to the marketplace?
I think it's shrinking the natural buyer base for the IPO story. And I think as a result, that takes the bar for a successful IPO a little higher in terms of the equity story to really be attractive to either hedge funds who are looking at this as a liquidity opportunity or the remaining active managers who really can look to participate in interesting stories they can't get in the existing secondary market.
You know, I saw a really interesting story in the FT this morning. World Chess has announced plans for a novel hybrid initial public offering. It will raise funds by issuing first digital tokens before floating on the London's junior stock market next year. Is that going to be the norm? So issuing a digital token first and then later on that will be converted into equity if it all goes well?
Look, I think there is no doubt there's a lot of innovation and a lot of change. You know, you look at some of the direct listings happening in the US, look at some of these token change. I think at this point, we're still in the experimental phase. The norm will be the traditional IPO, but clearly as technology evolves, as investor mandates evolve, there will be scope to look at different ways of doing things. But I think for now, and certainly for 2020, we should look at a more normalized process with some small examples for specific cases that might be different from the traditional process.
All right, Gareth, thank you so much for that. Appreciate it. Gareth McCartney, Managing Director, Head of ECM Cash and Global, Head of Equity Syndicate at UBS. Let's keep you in touch with the markets. The Forex markets are looking like this. We had a lot of movement this morning with the PMIs coming out. Many of them were disappointing, specifically the ones for the UK economy. Sterling dollar taking a hit on the head, down by 1/3%. Not too big of a change from the level that we're trading at before. We're currently changing hands at 128.70. But I should tell you that in terms of the composite flash PMIs for the UK economy for the month of November, that was definitely below expectations. That was the lowest print since 2016. We had the German and the French PMI numbers for the manufacturing side. They were better than expected, but then came the composite one, specifically the services side, and those really missed expectations. And that, again, sent the euro a little bit lower. European markets, equity markets, we should also be looking at because we're seeing a big bounce back from the last couple of trading sessions, a big reversal here as risk appetite is coming back to the market. The FTSE 100 up by more than 1% or 75 points. We're seeing basic resources, some of the material sectors doing much better. So recouping some of the losses the last couple of days, obviously, but they were all about whether the phase one trade deal between China and the U.S. is going to go through. Very little optimism. It's happening now. So that's why we saw the losses today. Some buyers coming back into the market. The Xetra DAX up by 0.2%. The CAC 40 also showing some gains. What about the U.S. markets? We saw 3 days of losses.
We did. We saw that longest losing streak on the Dow since August yesterday. And yet today, if you look at the futures for the other side of the Atlantic there, the S&P 500 is being called up around 7 points there. The Dow Jones, after that long streak, the longest since August, is being called 56 points higher at this stage of the proceedings. And the Nasdaq there, again, looking to trade up slightly stronger this morning once the market opens in just a few hours' time by around 27 points. Tesla has unveiled one final story for you. Its first electric pickup truck at an event in Los Angeles. The futuristic-looking vehicle has a starting price of $39,900. The Cybertruck is set to enter production in late 2021. CEO Elon Musk claiming the truck will not scratch or dent, said the windows are made from armored glass, but its windows were smashed during last night's high fanfare demonstration. That prompted Musk to joke there was, quote, room for improvement. Don't we all have room for improvement? That is it for today's show. I'm Willem Marks in London.
And I'm Carolyn Roth. It was a pleasure to be here. Worldwide Exchange is up next. See you soon. Bye-bye.
It was Sophie's big day. By the way, she's the next Mozart.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
The world is a noisy place. But whether I'm here or here, my phone calls are always loud and clear on my Doro 6620. Hi, love. Yes, I can hear you perfectly. I'm 10 minutes away. Get your Doro 6620 from Amazon, Tesco, and O2 today.
If your ideas challenge the status quo, if you have advised people you had no right advising, if you built companies and lost companies and built them again, if you've been called a pillock, a dreamer, an innovator and a genius, if you thrive in the 11th hour, if you have blown it and completely nailed it in the same day, prepare for your next departure.
Do business right. Travel Virgin Atlantic.
Hi, Susan. What's a Brew City Brew Bite?
It's Beer Munch.
Oh, all right, but what exactly is it?
It's Beer Munch.
Okay. But what about a Brew City Halloumi Fry?
It's Beer Munch.
And an onion straw?
It's Beer Munch.
Yeah, it's Beer Munch. Yeah, so you keep saying. Hot, shareable snacks. They're delicious with a cold beer and friends. You'll find them in the freezer aisle. Brew City.
It's Beer Munch.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks. Perfect for making tax digital. QuickBooks. Backing you.
At Ring, we've reinvented the doorbell. So no matter where you are,
You can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. For exclusive Black Friday offers on selected video doorbells and cameras, visit ring.com and major retailers.
The rally at risk. The Dow risks snapping a 4-week-long winning streak. Could it? Maybe. Not afraid to fight. President Xi out with a warning over the ongoing U.S.-China trade talks as a Phase 1 deal by year's end seems less and less likely. Vaping under fire. President Trump holding court today as he weighs the future policy against the e-cigarette industry as one major U.S. city looks to ban flavored e-cigs entirely. Elon Musk unveiling the company's latest creation at an event last night. This is not your grandpa's pickup truck. Plus, we're breaking out the earnings scorecard as retail wraps up a very busy week as worldwide exchange begins right. And welcome to the show. I'm Dominic Chu in the morning. This morning for Brian Sullivan. Now, stock futures are moving slightly to the upside. The Dow coming off its longest losing streak since August, down 3 sessions in a row. The S&P is seeing its longest losing streak since September, and the Dow is now at risk of snapping its 4-week winning streak. But as you can see here, if these futures gains hold into the opening bell, the Dow would open up by about 59 points and the S&P up by about 7 points as well. Now, the bond market also a focus today for investors. If you take a look at the 10-year benchmark government note yield, you'll see that we are slightly lower on the day, about 1.755%. The 2-year note yield, 1.597%. Let's now go worldwide. In the Asian trade, Japan did finish off in the green, up 1/3%. They had a manufacturing PMI that came in at 48.6 in November, marking a 7th straight month of contraction. And China, you can see here, closing up as well, at least with the Hang Seng, 0.5%. Shanghai Composite, mainland China, off 2/3%, closing at its lowest level since August. Now, in the European trade, we are seeing a little bit of that kind of mixed nature play out there as well, although we have taken a tick higher to the upside. German DAX now up 0.25%, CAC and France 1/3%, and the FTSE 100 up 1% in this trade. Now, those trade tensions continue to be front and center for investors. Chinese President Xi Jinping out with rare comments saying China wants to work for a trade deal, but is not afraid to fight back. Our own Eunice Yoon joins us now from Beijing to put those comments into context. Is this an escalation at the presidential level, Eunice?
Well, you know, it was really interesting, Dom, because this is the first time that we've heard President Xi Jinping actually commenting on the interim Phase 1 trade deal. And he said that he does want to see something worked out, but also that this deal would have to be negotiated with the understanding that the U.S. and China are both equals, and also that it's conducted with mutual respect. Now, some of the other points that he made when he was speaking to international visitors, such as Henry Kissinger, was that the trade war wasn't something that China wanted, but it is something that China would fight back on when necessary. So the markets here didn't really seem to be heartened by what they still see as quite a tense relationship. In fact, today, the Chinese Foreign Ministry also blasted the United States on another issue, and that is the U.S. sending more warships into the South China Sea, skirting islands which Beijing claims as its own. And this comes after the U.S. Congress had passed the bill that's seen as supporting pro-democracy activists in Hong Kong. Now, the other development that was interesting from President Xi's speech was that he hinted at some of the tensions by saying that China wanted to ensure its financial sovereignty. So this is even as China continues to open up its financial markets. And I think what was interesting, Dom, is how this is being interpreted as a signal that, you know, yes, we are in this trade war, we are in a tech war, and maybe now soon to be in a financial war.
All right. Well, outside of trade, Eunice, also there's some expectation of major news coming out of Hong Kong this weekend as well. We know that there are elections taking place there. Take us through some of the hits, runs, and errors there as well.
Well, what's interesting, Dom, is that there are going to be 4 million people heading to the polls in Hong Kong on Sunday. And this election is not something for the local, top leaders, but instead it's actually for district elections that are normally quite local and mundane. So the issues are like bus routes or noise pollution and these types of issues. But the election is expected to have record turnout just because of the backdrop of all the protests. So pro-democracy candidates are expected to win more seats, or at least they're hoping to be able to take advantage of the current temperature of the city. But the overall seats, though, are stacked with pro-Beijing loyalists. The other thing that people are watching for is concern about whether or not it's going to bring even more protesters out and more violent clashes. Security is very, very tight. People are worried about what they might see, but also, there are a lot of people who are worried that if the clashes do get too bad, that the elections could be suspended. And then there are plenty of analysts who say if the elections are suspended, that would probably even inflame the protests even more.
All right, lots to consider out in China and Hong Kong. Thanks very much, Eunice Yoon, live in Beijing. Joining us now is Larry McDonald, editor of the Bear Traps Report and also a CNBC contributor. Larry, we just heard Eunice talking about some of the flashpoint issues happening in China and in Hong Kong. We know that the markets here in the U.S. are still hovering near record highs. Is this a scenario now where the world economy, the world market, is all contingent upon what happens in the United States?
Well, think about Dom. Like about 12 years ago, everybody was talking about what's called decoupling, where there were problems in the U.S. and globally there was strength. And now it's the complete opposite. You've got problems globally and strength in the U.S., strong dollar. And I think what's going to happen over the next 6 months is a big, big trade. This is going to be the trade for the next a 2020 trade, a rebalancing of the global economy where the global economy strengthens relative to the U.S. and you have capital that will flow from the U.S. into global assets.
So if this is the case, how important is what's happening in Hong Kong with China and the tensions there going to play into this narrative overall? Is this a scenario where we could really see some kind of a downside event triggered globally because of what's happening in Hong Kong?
Well, it's really going to trigger a problem in the U.S. I mean, you've got this bill. We put a note out to clients last week. You've got senators and congressmen really taking the wheel out of the White House's hands. I mean, President Trump's going to try to do a trade deal. It's a skinny deal, but net, the pressure that's going to come from Congress, going to come from Democratic candidates. They're going to try to make Trump look soft on China. So there's this bipartisan effort in the United States to lay the hammer down, and that creates uncertainty, at least for U.S. markets.
All right, so that uncertainty right now is one of the reasons why the Fed did take the actions it has over the course of the year and cut interest rates 3 times. The interest rate environment right now, generally speaking, is it still supportive of what's happening with the United States with regard to the economy? And if not, what needs to happen to that interest rate complex, and where could we see some flashpoints there?
Well, you and I were talking a year ago, right about now, in November, December, and I made the point on this program that the beast in the market, that serpent in the market, was going to break the Fed over its knee. Credit risk was really rising dramatically, and that's what happened. The Fed not only caved on rate cuts, but they dramatically caved on the balance sheet. They were literally doing $50 billion a month of tightening. Now they've literally undone about $400 billion of that. But here's the thing: everybody says, don't fight the Fed. I mean, how many times have you heard "don't fight the Fed"? And I have a question for you and for all of our people watching right now. Why are people in the bond market, especially in the junk of junk bonds, why are they fighting the Fed? For the first time, and literally since Lehman went down, for the first time, when we have an accommodative Fed, you've got bonds that are dropping 20, 30, 40 points in high yield. And a lot of them, I mean, it's really a symphony of idiosyncrasies.
But okay, so one final point here. I can understand what you're saying about the general tone of the bond market and high yield, but those idiosyncrasies are only in certain parts of that bond market. If you look at, generally speaking, take a look at these ETFs that track high yield debt, and they're not rolling over by any means. So is this really a scenario where we feel as though the credit markets are signaling something bad ahead?
Well, you know what happens, and we saw this in 2007 with the mortgage market. There were idiosyncratic pockets of risk, and one by one, as they grew, it was a combination that it's what I call credit spread contagion, and we talk about in the Bear Traps report. So this has moved just in the last month. This has moved from tightness in CLOs, loans, triple Cs, and now it's seeking into single Bs. So. And think about it, the banks, the Fed obviously had to cave on the balance sheet. The banks aren't stressed, but the ability to finance bad assets, all this problem with WeWork, as you have default after default and bond after bond that's under credit problem. Right now we're seeing and this is the most important part of the interview. We're seeing underperformance of U.S. bank CDS. So look at right now, Citibank CDS versus the European banks. It's starting to widen. So that tells you that there's some type of credit spread contagion that's working its way through U.S. markets.
All right, so those credit default swaps will be a key to watch there going forward with those banks. Larry McDonald at the Bear Traps Report. Thank you very much for joining us this morning. Well, let's get a look at some of the other top stories that we are following today. Tesla CEO Elon Musk unveiling his company's much-anticipated all-electric pickup truck, dubbed the Cybertruck, in L.A. last night. Now, the vehicle, which is dominated by hard angles and sharp lines, as you are seeing there, will start at just under $40,000 and will have a top range of 500 miles on a single charge. This is Tesla's sixth vehicle since its founding back in 2003, so a lot of fireworks around that truck. We'll talk a little bit more about that later on in the show. Also watching, Apple reports this morning that demand for its AirPods Pro is shocking, much higher than expected. People familiar with the company's production plans reportedly say Apple expects shipments of the device to double to 60 million units this year, adding that demand is straining supply chain capacity since they were introduced last month. And Xerox giving HP an ultimatum in its efforts to acquire the PC and printer maker, threatening to go hostile in its bid unless the company agrees to pursue a friendly combination by next week. HP had turned down Xerox's $22 a share offer earlier this week, saying it, quote, significantly undervalues the company. When we come back on the show, President Trump holding key talks today on the future of federal vaping regulation. Up next, we speak with someone who has an inside glimpse into the president's thinking around that vaping issue. Plus, pure pain, why shares of this company are falling off a cliff this morning, as you can see here. And later on, casting doubt a Federal Reserve independent would be there. What President Trump's latest Fed pick is saying about the future of the central bank, a very busy hour still ahead when Worldwide Exchange returns right after this.
It is nice.
His haircut is nice.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all butter mini stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
The world is a noisy place, but whether I'm here or here, my phone calls are always loud and clear on my Doro 6620. Hi, love. Yes, I can hear you perfectly. I'm 10 minutes away. Get your Doro 6620 from Amazon, Tesco, and O2 today.
Christmas is such a magical time of year for little ones. But why should the big kids miss out? This season, take the family to Santa's Wonderlab at West London Audi. You get to test drive the latest Audi models, and the children get to test drive the latest toys with Santa. There's something for the whole family. Visit santaswonderlab.com to find out more about how to register for your place at Santa's Wonderlab this Christmas.
Morning. Sorry, Stevie's a bit poorly, so he won't be coming to nursery today.
Okay, thanks for letting us know.
So I brought Max instead. I packed his favourite toy. He normally naps twice a day and loves playing outside.
Like getting your money's worth? Enjoy the delicious cheeseburger. Just 99p from the McDonald's Saver menu. From 11 a.m, price and participation may vary.
At TUI, we can help you find the perfect family holiday. And with flights from 20 UK airports, we make getting there a whole lot easier. Book now and choose from thousands of holidays under $399 per person, and spread the cost with £0 deposit when paying with direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's, and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At or protected.
It's a live shot of our nation's capital, a hotspot these days, not just because of the congressional inquiries, but also regulations targeting certain industries. New York City is moving forward with plans to ban sales of nearly all flavored e-cigarette products after weeks of delays. This as President Trump today is holding court with outside stakeholders on the issue of youth e-cigarette usage and the possibility of government regulation there. Industry, advocacy, nonprofit, medical, government groups, you name them, they're all expected to be in attendance today. One group that is curried favor with the president on the issue is Grover Norquist's Americans for Tax Reform. Now, the group's head of vaping policy out with an editorial earlier this year on the issue, one that caught the president's attention. Quote, banning flavored e-cigarettes might cost Trump the re-election. So joining us now from Washington, D.C. in a first on CNBC interview, Director of Strategic Initiatives for Americans for Tax Reform, Paul Blair. Good morning, Paul. I got to say, when I saw the headline there, I was shocked as well, because I'm thinking to myself, how can vaping really swing the election? Take us through the thesis. Why is this such a key issue for President Trump?
It's a great question. And for viewers who either aren't smokers or have never used e-cigarettes or haven't used e-cigarettes to quit smoking, it might sound really weird that this is an issue that could be a significant political issue, either in 2020 or in state races or federal races. The reality, though, is that in 2016, when we first conducted polling on this issue among adults that use these products, we found that 3 out of 4 adults across the country, at the time there were probably about 10 million according to FDA and CDC data, that 3 out of 4 of them were single-issue voters, that their vote-moving issue for who they were going to select as a political candidate at the federal or state level was where a politician stood on questions of access to vapor products. That poll has been replicated by actually one of Donald Trump's campaign pollsters, John McLaughlin, just past month, this past month, showing essentially the same thing, that more than 80% of the adults that use these products are single-issue voters. And by the way, it's not only 10, 15, 20 people that use these products. We now have data from the FDA and CDC that shows at least 13 million American adults use these products. And so when you add up the number of adults that feel deeply passionate about access to these products because they attribute them to saving their lives, because they've been able to successfully transition away from cigarettes onto lower risk alternatives. In a state like Michigan, where Donald Trump only won by 10,700 or so votes, where there are more than 420,000 adult vapers who have used these products again to quit smoking or reduce their use of cigarettes, it is a significant political issue that certainly in some swing states, as we've argued to the White House and to the campaign, could have a major impact on the outcome of the election next year.
All right, so fair enough. I understand the adult usage issue, and I understand that those people vote or might vote or would be interested in voting there. But the issues around the vaping kind of epidemic have centered not such around maybe the adult side of things, although it is big, but it's around teen usage of these products. And that's the reason why President Trump has kind of turned his attention to this. How exactly does that play out, though? Because teen usage is a key issue here.
Absolutely. And I think it's first important to note that reported past 30-day use of cigarettes among teens, for example, fell at the largest decline in American history, 28% this year. And so while it's certainly important to look at what teens are experimenting with, the proposition and the question is, do we focus on teen experimentation with products at the cost of restricting adult access to products? And there are policy proposals that have been provided to the administration and to Congress that could address the teen use question. In the United States, across the country, you already have to be 18 to buy these products. Senate Majority Leader Mitch McConnell is pushing an effort that raises that age to 21, and that's a proposal that's been endorsed by the president as recently as 2 weeks ago. And so there are also opportunities to restrict marketing and advertising of products to ensure that there aren't silly brands or IP violations for companies in terms of the use of cartoons and silly things like that. Those are all reasonable restrictions that the federal government could place on this industry without removing these products from the market, particularly for the products that are being successfully used, flavored products that are being successfully used to transition adults away from these products. And so, again, it is important to focus on teen experimentation, but it can't come at the cost of adult access.
All right, so let's talk a little bit about whether or not we can kind of button this up here. We talked about the number of stakeholders that will be present at this particular meeting to talk about vaping. Are they going to be able to address the numbers that the CDC puts out every week with the increased number of deaths and illnesses tied to vaping when the Centers for Disease Control still does not really know what is causing all the illness?
Well, actually, a November 14th announcement from the CDC finally provided the sort of clarity that we've been talking about in this space for about 3 months. And what they found is that of all of the cases that they've tested products where individuals either got sick or an individual using a product ended up passing away, what they found is a product called vitamin E acetate, an additive that's added to marijuana and THC products that individuals vape. And so that is a completely different conversation than nicotine or commercial nicotine products that you find in vape shops or convenience stores. And so I hope there's an opportunity to address that, because the CDC has finally admitted that it's not flavored e-cigarettes that are getting people sick. It's marijuana and THC products that people get from their friends on the black market and from drug dealers. And it certainly took a few months for the CDC to get there. The FDA was a little more out in front on this. But it is an important issue to address, because it goes to the question of conflating the use of two different products and overregulating one industry because there's a misconception about the use of a product in a completely different industry.
All right. Paul Blair on vaping. Thank you very much. We'll be kind of following those developments very closely out of Washington, D.C. We appreciate it. Well, still on deck for the show, music manager Scooter Braun breaking his silence about his public dispute with Taylor Swift. Plus, why Baby Yoda, yes, Baby Yoda, may be the next must-have item on your holiday shopping list. It's trending, and it's coming up when Worldwide Exchange returns after this.
I'm a regular in my neighborhood.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
So, on Monday I left work at 5:36 instead of 5:30. Wednesday was 5:41. Yesterday I made the whole team a cup of tea. And today I lent someone my stapler. Do I deserve it? Yes, I think I do.
Go on. Treat yourself to an O2 Black Friday deal. We've slashed our prices by up to £300 on selected handsets. You know you deserve it. Search O2 Black Friday.
It's 4th of December 2019. O2 Refresh Credit by Telefonica UK Limited. Eligibility and terms apply.
At TUI, we can help you find the perfect family holiday. And with flights from 20 UK airports, we make getting there a whole lot easier. Book now and choose from thousands of holidays under $399 per person. And spread the cost with £0 deposit when paying with direct debit. Book online or in-store with one of our travel experts. At TUI, we cross the T's, dot the I's, and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At or protected.
I mean, I just think of Clint Eastwood. Let's get a check.